G'day everyone. It's been a few weeks since my last update, so let's jump straight in and have a look at a few charts. The market's been volatile once again the past couple of weeks. So I've got a few charts of the indexes and we'll take a look at gold and Bitcoin as well. All right, let's get into it. All right, the first chart I've got for you today is the ASX 200. As you can see, there's a couple of lines there that are important markers. The market during the October sell-off came right back down to support the lower, which is the lower green line there, bounced up, which it often does after a big sell-off, sold off again. And what we're looking for now is to see that support line hold. We've had a few days of consecutive selling, so I wouldn't be surprised to see a bounce pretty soon. But just for your reference, it's important that we see that lower support line hold. Otherwise, I think in the future, you're going to see significant falls. And just to back that up, the next chart to look at here is the small ordinaries. That chart, or the small ordinaries or the small cap index, was doing very well, but then sold off sharply in October. Once again, similar to the main index, it's attempted to rally, and now it's coming back down to form a support. And I've drawn a long lower support line there, and you can see that the support from the October falls matches the highs from 2016, which often happens in markets. So once again, if that line holds, or if that support holds, I think the markets could be trying to find a bottom and potentially rally into Christmas. So that one's worth keeping an eye on as well. I think one of the keys to the whole market performance over the next few months is the resources sector. As you probably know from the state of the housing market and the Royal Commission into the banking industry, the banks and the financials have been under pressure for quite some time. So that part of the market's looking very sick, and what's been holding the market up more than anything is the resources sector and the big miners. And that's really because iron ore prices have remained strong, volumes into China are good, and coal prices are also strong, and obviously big export volumes. And they're two of our largest export earners, and the big resource companies earn a lot of money from those exports as well. Based on this chart, it's a little hard to determine where things are going to go from here. There's a potential that we're seeing a bit of a topping out in this sector. But once again, prices are holding above support there, which is the lower green line. And if they can continue to do that, I think that should confirm that we're looking at the market trying to find a bit of a bottom around here and a rally into the end of the year. But worth keeping an eye on that lower support. And if the resources stocks do break below there, it could drag the broader market down as well. Turning to gold now, we've looked at this a few times in the past. It's taking quite some time, but it looks like gold's trying to form a bit of a bottom here. There was a sharp low in August, a bit of a rally and sideways movement throughout September and October. It was actually good to see gold rally while the rest of the market sold off in October. So we had a good rally there, a little bit of a retracement, and now once again gold's rallying and it's sitting around about $1,220 an ounce. I think the next step for gold is to form a little bit more of a base above around about $1,215 an ounce, and then move higher. And if it can move above $1,230, $1,240 an ounce to new multi-month highs, I think that will confirm that we have seen a bottom in the gold price in August. Confirming that view, if we look at the ASX Gold Index, saw a big sell-off in gold from July down through August in September, but then that started to rally again, and we're seeing the gold index, which is basically the gold producers that are listed on the ASX. That chart still looks pretty good, which could set us up for a continued rally in the ASX gold miners. Finally, some not so good news for cryptocurrencies and Bitcoin. I've been keeping an eye on this chart for most of the year and have a look at it from time to time. I was away last week when the Bitcoin broke below a support level that's really been holding for most of this year. And the way I look at that, that's a pretty ominous sign. I think a lot of people would have been buying here, expecting or hoping that we'd found a bottom and expecting to make good money, buying at what they thought was the bottom. But we've had a pretty sharp break below that support line. And in my view, you never know how the future is going to turn out, but the odds suggest that you're probably going to see continued falls over the coming months, and the next stop will be somewhere around about $3,000 a Bitcoin mark. So Bitcoin doesn't look good at the moment. We're in a downtrend, but realistically, you saw a massive bubble in Bitcoin in 2017, and it really takes some time to deflate, and often the deflation of a bubble takes it all the way back to the start. So, this could end somewhere in 2019 or 2020, somewhere between $3,000 and $1,000. And at which point would probably be worth looking at buying again. But at the moment, I'd be steering well clear and trying not to pick the bottom in Bitcoin. All right, thanks for listening. That's this week's update. We'll catch you again next week. Thanks for listening, and be sure to click on the link below to subscribe for more market updates.